This is a Crypto Legends podcast.
Hi, everybody. This is Adam Bialy from Fiat Republic, and you're listening to Crypto Legends Podcast, the show where we meet legends and creators of Web3. Today, we have a great pleasure of having a blockchain and fintech expert, Diana Biggs, on the podcast to set the record straight on what's going on in crypto right now and what can we learn from it. Diana, it's great to have you on the show. Thank you so much for joining us. You've been in blockchain/crypto for a long time now. So a lot of projects around economic freedom, around financial inclusion. Can you tell us a bit about how it started and how did you get into crypto and DeFi and blockchain in the first place?
Yeah, so thanks so much for having me here. It's great to be on the show. I feel like I just said that in such a Canadian way. Sorry, I just got back from a week in Nova Scotia, and I think I
Being
said,
nice.
I was
Being
like,
nice.
it's like the show. Yeah, so I heard about Bitcoin, I think in like 2011, through a friend who actually works in private investigations. Somebody mentioned it to me, like in the context of the dark web. So I didn't really pay attention, but it was kind of like, oh, that's something that's unusual. Then it came up again in spring of 2013. I was in New York City and actually crashing with my younger brother, who is a computer programmer and kind of like really into tech. I mean, my whole family is like very much into like tech, like using the internet from the early 90s. We used to go to something like that I've mentioned a few times before. It's like we used to go to 2600 meetups and kind of like exploring the cyberpunk movement and like hackers and like ways to use technology. Yeah, to sort of like, well, back then the narrative was really around like information wants to be free and how we can use this technology to empower people. And that is sort of like the same energy that really resonated with, it was really Bitcoin that we were focused on back in 2013, but starting to go to meetups and get involved with the space and the community that was starting to build around it. It was similar to that narrative of information wants to be free. And this is sort of like more around financial freedom. And that really resonated for me because actually I had just spent the year 2012 working in West Africa on microfinance, financial inclusion projects. I had been quite focused predominantly on sub-Saharan Africa in my years as a management consultant in financial services with Oliver Wyman. And so working across there and also across Eastern Europe, I sort of became more aware. That was my first time working in finance post my MBA. I was interested in like these more entrepreneurial projects, and then also just became more aware of like the plethora of issues with our existing financial system. I also joined Oliver Wyman in January of 2008. So I started working in financial services at
perfect timing.
Quite an interesting time. So then, that was a sort of 5 years of lots of change and lots of just questions around how is the system even built, and also risk management and the regulatory implications of the way that the system is currently working or was currently working, which I think now a lot of those lessons actually could prove to be interesting ones as well for this industry. Or that we're learning maybe
history likes to repeat itself.
Yeah, we might be in the process of learning the hard way. But it's sort of just a re-emphasis around the necessity for risk management and the realities of regulation, or if you don't have regulation at the beginning and things start to go wrong, how that might end up playing out. But what was really exciting about it was as I said, like that sort of the ability to potentially recreate these existing systems in ways that are more accessible, transparent, inclusive. Still a work in progress, but that's sort of that's the vision.
Sounds like you've done a lot of work, and especially this topic of financial inclusion. I think that's really fascinating from the perspective of like enabling more people to gain access, like to what we consider as normal, as mainstream, right? In parts of the world that is not available, right, and is precluding that idea of inclusion. So what are the top sort of real life use cases around financial inclusion that crypto or blockchain can facilitate?
Yeah, I think we still need to figure that out and really make compelling use cases here. I think like there's the potential for creating rails that can potentially make things easier, more accessible, for creating like infrastructure, new systems that are more accessible. But there's a lot of complexity to that. I mean, this is one of the like this is what's really exciting about this space, is that people are trying to tackle really, really complex, hard problems in general. So I think that's bringing a lot of minds who want to be challenged into the space. That's what makes it so fascinating. And you constantly are meeting really interesting people with really diverse backgrounds, with different like motivations and experiences. That makes this an exciting space to work in. It also brings a lot of naysayers, because it is easy to point out reasons why none of these solutions could potentially work, or what the problems could be, because there's a lot of them, because these are really, really hard topics. On like financial inclusion, or looking at humanitarian use cases, which I did quite a bit in my through some of my work over the years in this space. The challenges go far beyond tech, and sort of this was always something that I was looking at also when I was looking at like overall tech for good. So when I did start looking at Bitcoin at the time, I was actually running co-founder of a social enterprise, and so very much in that sort of like tech for good social impact space. And while I was working on those sorts of solutions, and like really an advocate of like tech can be used for good, like it's also not this, it's not going to be just like clean cut solution, and like tech is a tool, and it's the same with sort of businesses that want to enable financial inclusion, or want to create more equitable systems in whatever way. It's also a business decision that you have to take. So it's not something that's naturally going to happen. I mean, it takes a lot of work to design systems that are going to achieve the goals, and you have to be like really clear about those goals. And that might mean that you don't take as high a profit, and that might mean like other implications that you really need to design for. So I don't think there's like an inevitability that, say, crypto or any one other tool is going to bring those outcomes if you're not purposely designing for them.
Yeah, I would definitely agree with that. There was a case in Africa, I think, a company called M-Pesa, right? That is facilitating payments in a sort of, underbanked country. I think it's Kenya. I'm
Yeah,
not
and
100%.
Pesos, yeah, it
Am I?
like expanded across a number of countries, but Kenya was the first one, and still is like the predominant. Like it's where it's most popular in terms of like a mobile money solution. And and there's lessons to be learned also in why M-Pesa wasn't able to take off as well in other countries. And sort of the different number of stakeholders that had to be involved in order for that to happen. I mean, the sort of like economies of scale there, they partnered with Safaricom. Safaricom was the main telecoms provider across. So then you already had people that were using a certain type of system. They have an agent model where you have individuals who are buying and selling those credits, so that you can get that kind of coverage around the whole country. Then there's like business payments. We actually use that for our business. So our social enterprise was based out of Nairobi. We would make our payments with M-Pesa, but then also with M-Pesa, like it wasn't cheap. Like you had pretty high fees that you pay per transaction, just that you were now able to easily and through a mobile device make these microtransactions that people wouldn't previously have to rely on cash for. Because they didn't necessarily have bank accounts and you didn't have that sort of system of easy ways to transfer money. There's sort of, so it's like an equivalent of Venmo, but that you can use on a feature phone, and where it's easy to get these credits and then to send them as a remittance across the country. And then increasingly, like they're still sort of working on building out the interoperability between different mobile money networks across different countries. So there's certainly like a lot of lessons and parallels there that we could look at when we're thinking of like, how do we make interoperability across, like for crypto, it's not geographies, but it's sort of, as it is similar there, like the different mobile network operators, like the different blockchains, the different cryptos, like, and looking at like those sorts of agent models for the on and off ramps. How are you getting like accessibility and actual, like, how are people actually even able to use this for payments? And able to take the money in and out. I mean, like throughout 2015 and 16, we saw a lot of startups who were looking at this remittance use case. And the narrative there was really around like these could be more efficient, cheaper rails. And then I think a lot of lessons were learned in terms of like, where is the actual cost coming from? And when we're looking at, remittances overall around the world, I think the average people spend or have to pay is like 6% in fees. But actually, you have like super highly efficient corridors, like between India and the US, Mexico, Philippines, where fees are incredibly low because the remittance companies, some of these like Western unions are like, they have that corridor is really efficient. They're able to like balance out the pools of money on either side there. And they're also making up for those costs in order to be competitive by some of these corridors that are much more expensive. And there it is often around those integrations. So so the challenge there was really like building out those on and off ramps in the different countries. And there it's like from, going to sort of all the local desks where you have individuals that are doing that in a very like lo-fi way, or integrating with banks. And if you look at like bank integration, like traditional banks, I mean, even in the UK with open banking, we've just had to have all of the banks, at the sort of government request, build out APIs in order to have like any kind of like data and payments interoperability. That took like the world's like these like super large, very well-off banks, 3-4 years to build out.
I still remember I was at Sainsbury's heading up payments, and we were experimenting trying to pay or enable an experience where you pay from your bank account via PISP at the till in a store as you're standing in the queue and trying to buy that chicken, right? The first couple of years, or when PSD2 landed, and just the open bank implementation authority started providing guidelines to the banks of what to actually do. The experience looked like, oh, so you're standing in that queue, and then all of a sudden you're called by Lloyd's. And are you sure you want to give access to that third party that we know nothing about, and for them to facilitate your payment? And this I remember from the trials, the customers were like, okay, can I just buy my chicken? So it's I don't think it was ready. But just going back to M-Pesa for a second, do you imagine, or can you imagine, a scenario where M-Pesa is powered by either DLT or blockchain or crypto in any meaningful way? Like, would that change anything? Like, to your earlier point around tech being the tool, right? Is there any iteration that we can, for example, in those kind of local Venmo-like payment schemes, when we introduce crypto or digital assets like stablecoins, for example, would that change any of those sort of value chains that were built to support those use cases?
It's been a while since I looked at exactly how like that their actual network is set up. But I guess I'm not entirely sure of what benefit it would bring, because you essentially have, I mean, you can, whether or not, if you consider M-Pesa to be like a token, like it's anyways going to be within its closed loop system, and then sort of like doing its settlement there on a whatever, maybe like a daily basis with the banks. Um, so depending on like what their internal infrastructure looks like, if optimizing that creates any efficiencies or cuts down any costs there. But I think, it's a bit of a
But
stretch.
it sounds like it would
Yeah,
err
yeah.
on
It
the,
would depend. It's sort of like a
yeah, you would,
typical like that sort of more is like a typical digital transformation type of project, like the one that we were just sort of like speaking on, or you would have seen like in something like a Sainsbury's. Like, is there enough of an incentive for us to have to recreate our internal infrastructure? And I would say probably right now you don't have like a massively convincing argument for doing that. And I would say it's probably also the case with why we haven't really heard much from a lot of these sort of financial services private blockchain use cases. Sort of like what I've seen from my own experience, like from being inside a bank or from looking at some of these, it's sort of like wasn't really like ever convincing enough in order to, just given the sheer like amount of work and coordination it would be to replace the existing infrastructure. I think that's sort of what makes the public blockchains, well, that's one of the many aspects that makes it more interesting, because then you have the infrastructure that's being built out anyways, and if you can instead just connect into that if and when it makes sense, so that you don't have necessarily to rebuild or reconfigure an internal one. It's also why it's sort of, I think the argument is greater for projects where you're starting from scratch, or there really is like a joint incentive to shift over to something new entirely. But I think it would need to go
yep,
beyond just
yep,
like
no,
a closed loop system, or you'd have to wait until that infrastructure got to a point where it needed to be replaced in any case, and then evaluate it against the other options.
yeah, because the inefficiencies would become more sort of prevalent or hurtful for the continuation of that use case, I guess. But yeah, I would agree. Okay, switching gears a little bit. So we talked about Africa a little bit. Sainsbury's was there unexpectedly as well.
But I really remember that, and
Um,
I think like that's I think what's interesting about that. And sorry, I'm just making the light go on, and like open banking or all of these things overall is that like you had this promise or this idea, and you don't really see like the frictions in terms of what the user has to experience until you start doing those actual proof of concepts. I mean, that's definitely something that I noticed also, like building out innovation teams. I was doing that at HSBC, is really like just start to do user testing as soon as possible. We use the FCA sandbox twice just to be able to actually test with real customers, and like being a bank so large, in order to do that, the regulator wants to keep a close eye on what you're doing, and that lets you actually like build out even just like quite early stage like MVPs, and then actually test them with people and see, are people going to go through this amount of friction. And like even for something like open banking, which is something that I've been working on PSD2, just regular payments, this isn't like super innovative, but there's still so much to iron out there. Kind of is like, yeah, it's like a reset in terms of expectations of like where we think we can go now, that especially as like there is a sort of merging of crypto and traditional finance, and how long it might take for some of these things that we're working on to be accepted and to be integrated. Like if we can't even just update sort of like how regular payments are made, because there were all those steps and all those permissions. And again, that goes back to sort of like regulation and the potential implications of that. Sort of there you have like a mix of sort of data privacy, data consent, and then also like the sort of the financial services or regulation just over sort of payments and anything like that. And those are all things that increasingly more and more crypto products are going to be facing, even more so now that we're starting to get that regulatory clarity. So that's something to be conscious of in terms of just like the pace, which can be frustrating. I mean, it's certainly why like I went back into traditional finance. I came back out again, and what makes crypto so exciting to work in. But yeah, there are those realities as well, and like my real hope is that we can find a way to sort of meet in the middle and to actually build out and work with adjusting the way that we're able to do things into a way that does allow and enable innovation and a faster pace of change, just given that things do move more quickly these days. But yeah, that takes like a lot of cultural shift, organizational shift, sort of upskilling and sort of new skills introduced into the different parties that we're interfacing with in industries overall. But fingers crossed.
Yep. Absolutely. Yeah, well, we'll get there. We have to. I mean, right? So I was gonna talk to you about Switzerland, right? I'm like fairly acquainted as well with the country and how it's run and how it's governed. My granddad is of Italian Swiss descent, so I've got some roots there, Ticino. So Switzerland has been called, and at least especially in recent times, the crypto valley. The country itself, if you look at it, right, and I had Cyrus, CEO of
Awesome.
Swissborg,
Yeah.
recently say that at the Crypto Valley conference, that Switzerland is essentially a DAO, right? Because it's a direct democracy governed by referendums, very very frequent ones as well. Um, and so, do you agree with that, like that comparison, that sentiment? Would you agree that Switzerland is, in a weird way, compatible with all of those concepts of distributed sort of decision making that DAO is one of them that they introduce?
Yeah, so I guess I wouldn't say Switzerland is a DAO, but I think there's some really interesting parallels in terms of how decision making and how the governance is done through this direct democracy. And I think it's definitely an interesting case study to look at in terms of what does and doesn't work. I think we still have a lot of work to do with DAOs and trying to figure out what the different types of organizational design that work, and understand best practices, and there are and will be just different ways to set those up, and different sliding scales in terms of like what you want to optimize for, and what makes sense for any particular organization. So I think, there's lots of readings that can be done on organizational design there, but then also looking at it, like, I guess what you could say is that like crypto projects are sort of more like countries than companies often too, because like the way that they have their sort of each with their own sort of monetary units and treasury, and these types of decision making governance considerations as well. So I mean, I've been in Switzerland for less than a year, but from what I see, like things here definitely work really well. So it would be something that I would say to look at in terms of like how is that and why does it work so well? Like interesting things that I noticed that I just haven't seen before in other countries that are like quite actually like a stark differential is that like you never see, like, I don't even know if it's called like a prime minister, but like that sort of figurehead of government, you don't hear about that person's name. And sort of like at the federal level, there's 7 people and it's split across all of the different parties. So like there's no like some of the larger parties have 2 seats, some of the smaller ones just 1, but you really just have 7 there, and they rotate annually, and that sort of, and like the sort of the prime minister, maybe that is, I don't know if that's the Canadian name, but
It's a counselor. This is the counselors.
sort of like the main,
I
the
think so.
lead is really just sort of more like it's almost like a more diplomatic type of position, because the actual decision making is shared there at the federal level. But then you have the cantons, I think there's 26, and then you have these municipalities that make up the cantons. And it's really, it seems to be that their focus is about like pushing the decision making as local as possible, and only in the cases when something can't, or it's really would not be efficient to decide that at that level, that it goes higher up to either a canton or above, and that everything can always be challenged by the people in a vote. So like everything is automatically a referendum, versus like in some other places where you might need to call one. So I think that's really fantastic, because it allows for diversity to flourish, and like it probably creates better outcomes for those specific groups. And you have this involvement. I think that's also like an interesting, like there must be sort of like a cultural acceptance, or just like
the participation. You mean like where everyone is participating?
when if you're used to that, and if it's also like something that's necessary because everything is a referendum, then you feel, and people can call that, it doesn't have to be called by a party. I think you have like a different sense of agency from the individuals as well, and that probably creates sort of like those network effects as well, because you have that around and sort of embedded within. Which, when you don't have that, I mean, you can see how it's easy to move in the other direction. So
towards tyranny.
I think it's
Tyranny is the other direction, right? So just staying with Switzerland a little bit, because it's a fascinating country for many reasons, including regulation, right? So regulation in crypto, for crypto in Switzerland is quite mature, and the government, I think, is cheering quite openly the crypto industry or digital assets industry. What could the rest of Europe, I guess, maybe the European Union, UK, and the world learn from Switzerland in that regard, in terms of regulation for crypto?
Yeah, that's a good question. I think what's really working well here is that they've provided that clarity quite early on, and that there is the openness of communication. So, from my experience, from what I'm hearing, it's quite easy to get interaction with the regulator here, and to get clarity on like where are the boundaries or whatnot. So then companies are then able to move forward, understanding where they stand, and not sort of having to worry about like what could be the potential implications a few years down the line, by having that dialogue and by setting up those frameworks and rules sooner rather than later. I don't know. I don't know if that means that they're set in stone. I mean, I'm sure things can change along the way. It also means like that there are those regulations, so you do have to work within them. But overall, I would say like that it's really helpful to have that, and to be able to at least have that dialogue, as we sort of work through all of the learnings that we are within the industry, and that there is that encouragement that there is a lot of energy here, certainly, like with different companies and different efforts, joint efforts with the regulator, in terms of encouraging and fostering the industry, which would be really great to see. And I mean, which we do see to some extent, but I know that even sort of in some countries it can be mixed messages. If like the government, I don't have to name any specific country here, but like if the government is saying that they want to, be a leader in crypto, then the regulator is not, and sort of like getting everybody on the same page, or if different regulators are looking at it differently, then that kind of stalls. At the same time, I mean, and I think also, obviously, for attractiveness in terms of setting up a business and wanting to work here, Switzerland has a great reputation. Switzerland has a very strong, history in financial services. Neutrality is in the center of Europe, so it has a lot of other things going for it as well, that could make it attractive. But overall, of course, like some of the larger countries are going to be the ones where there's probably more implications overall for everyone. But in terms of being based here, it's great. I mean, just being smaller, I think some things that it could look at in terms of like how could we do better is maybe looking at like the availability of talent and work visas and how that works. But yeah, overall, I would say it's a great place to be based, but it is one of the smaller markets, and I think no matter what, we'll all have to be looking at what does happen in some of the larger regions in terms of the regulatory direction, just because of the global nature, the inherently global nature of businesses in this space.
Yeah. Yeah, I would definitely agree with that. There's a clear, it's almost like there's a bridge that the government and the regulator in Switzerland created between TradFi and crypto digital assets. Seeing that bridge almost made them I guess get ahead of other countries in terms of regulation, providing that clarity, as you were saying. What does the bridge between TradFi and crypto look like today elsewhere? Let's forget about Switzerland for a moment, but like, what does it look like in the current environment, especially now? You had this drama of Terra Luna, and the downturn that ensued after that. How does this bridge? How do we even begin to build that bridge? Because, like, I would argue, for example, that it's not there yet. That there's maybe like a plank from one side of this river to the other. What does it look like today?
Yeah, I think it varies depending on countries and also like different companies, right? And that has to do with like their own risk appetite, their appetite for innovation, whether or not they have those types of capabilities and like budget to invest into exploring these new types of areas, whether it's even just crypto or any type of fintech or innovation. So you'll always see a variance there, and also in terms of how it fits into specific business models, and whether there is an immediate use case for them to jump into, or whether this is looking into like the potential in the future. So like, for example, what our company does, Valor, we're doing ETPs. So these are, exchange traded products traded on traditional stock exchanges. In our company, we're actually doing our own market making, but we've seen market makers that are doing traditional market making, like for ETPs, for traditional ATP products, now looking at crypto products and moving into that. There they have like a clear use case, and are able to serve both types of clients. So that's interesting. So that's something that they can look at. Whereas for other types, they just might not have that immediate applicability in the space yet, and it might be something that they're looking for, or it could be that they're looking at it in a way of like, is this something that can potentially replace me in the future, and like, do we want to look at building out something like that, just in case things do change in that direction. And I would say that typically happens less often versus like an immediate revenue channel that you can jump right into, or even just start like testing out and then have people get comfortable with over time. I mean, as you probably know, also like from traditional finance, I mean, the main barrier for us to really innovate and change and build out new concepts and new business models in TradFi was not like that we didn't see that opportunity or know that that's there. It's really the cultural change and getting that shift of like accepting that this is the way. So I think because it's still nascent, and because like incidents, as you know, like sort of what some of the things that we've seen this year can scare people off. There'll be different appetites depending on the risk appetite. At the same time, it sort of does emphasize how individuals looking to move from those traditional spaces where they do have usually larger teams and risk and compliance might want to move over, and like the opportunities for them certainly. It's also interesting to see that like a lot of the failures recently have been because of centralized platforms. So I would say that it also sort of created a pretty compelling case for open source, for decentralized systems, for the transparency that you have with those. So I think like in terms of like creating that bridge, there are some of these that exist. It's certainly something that's a focus for our company, is like being that bridge. But then also, yeah, as you say, it takes companies like ours that can understand both sides and that are able to be that interface. And then, it's a lot of working through on both sides in terms of like how's that going to work, and getting everybody comfortable with that. And I should say like obviously with the sort of the comfort level and the sort of like the permissions that are typically needed in order to launch new types of products, that the real work there is obviously still on the traditional finance side, because these are new technologies. They do want the reassurance that whatever they're building out and enabling will be compliant, will be secure, will be sustainable.
Absolutely. So I'm almost imagining it's not a Golden Gate bridge. It's like this plank, and then every now and then someone falls off from this plank, and then causes a crypto winter. So let's talk about the crypto winter. You've been through many a crypto winter, I think, because you've been in this space for years. What would be your advice to people that have just gotten into crypto now, right? And now are just completely panicking and freaking out. How would you, comfort them or reassure them that this is like, it's here to stay, that this is the future? It's just that, there's going to be blips along the way, and so they don't fall off the plank and jump into the water.
Yeah, I think interesting. I think it's an individual decision, like to some extent, in terms of like how much risk you're comfortable with, and also what is your personal motivation for being in the space. So I think there's a lot behind that type of a decision, and why someone may or may not want to do it. And so, for some people, it could be a good sign that maybe it's not for them, and that they thought things would be, if they thought things would be easy. I think their problem sounds like that would be somebody who's also just new to startups overall. Then, then I would say, it's probably not for you. If you came in not expecting that sort of volatility. So first, I would say, read up on just like markets overall, read up on the history of markets, and then like think about like why are you in this space? Is it because you believe in like these ideas of decentralization, of rebuilding out infrastructure for entirely new systems and models? That's going to be, as I sort of said before, like that's a really hard problem to solve. That's going to be extremely challenging. It's not going to be up only, and it's really a huge experiment at this point in time. And so, do you want to be experimenting, and do you want to be building out for what could potentially be, an amazing new future? Like, you have to believe in that. Everybody has to believe in that, and then it can happen. And if you're not sure, then yeah, I think look,
Don't do it.
don't do it. No.
Yeah, exactly, right? So like if you don't have the risk appetite, it's like that's what you're saying. You don't have the risk appetite. Why would you go into that and then get burned, right? Um, would you agree with that? Would that be
Yeah,
fair to
yeah,
say?
but I would say, also like, I mean, I wouldn't say like like that people sort of aren't welcome, whatever. But I think here it's just where I really think like there's a lot of important lessons about risk management, about humility, and about understanding history. I think a lot of people, um, I don't think that history is taught as much as it should be, and I feel like sometimes people working in something new think, oh, this is something like entirely new and it's different, and so none of this history or the examples or different markets are relevant to me. And it's like at the end of the day, nothing is ever completely new. You have many years of different types of innovations, incremental innovations and large innovations that all built on top of existing ideas. That's just how everything works. And so it can just be really helpful to sort of like take a step back, understand more about like the overall concept and like how things work. And you can draw really interesting parallels from different industries and just like a history of innovation, or you could go back all the way to sort of like the Renaissance. And like, I think that's what's also exciting about this space as well. Like we could be like creating entirely new models for like human interaction in society, and hopefully we are. And so then you're not just looking at something as like narrow as like financial markets over the last 100 years, but then that also, looking at that history, also brings a lot of really interesting parallels and lessons and like helps put perspective. Um so yeah, I guess that's just like another reason to stay involved, because and like particularly with like the current like political climate and all the changes that are happening in the world. I mean, yeah, if you could look at it from like those completely different angles as well, and then maybe it will actually ignite your desire to stay in the space and realize that these bumps and stakes along the way are actually quite
Are
small at
necessary.
the scale of the universe. Yeah, and certainly necessary in order to give a great big dose of reality.
Absolutely, absolutely. So speaking about this downturn, like well, something that happened very recently, and many people got burned, lost their money. I was speaking again at a panel recently. Talking about like we were at 300 million users or crypto holders, right, by the end of 2021, and now the crypto downturn came. Now we're all of a sudden back to 100 million, right? So this adoption is not really deep enough for people to sort of to stay at the first sign of trouble, right? But from the sort of origin story of that downturn, specifically the most recent crash, what do you think caused it? And then the second question, how do we get out of it?
Good question. I definitely don't don't have the answers. I think in terms of like the downturn overall, I mean, we just came out of like a year of like a lot of stimulus and like markets performing extremely well. People had money, people were online more than ever. There was like a real convergence of a lot of different factors that sort of led to the up, and then the sustainability of those is brought into question, and that's much more widespread than crypto. We're seeing like the impacts of that and like all these different macro events. And then on a crypto level you kind of have like macro events happening at like a project level. And then the space overall is quite connected and quite small, so then you have a lot of run-on effects of um, certain projects and lack of risk management or different issues that they've encountered. And so those have knock-on effects too. And a lot of the projects as well were projects that you wouldn't see the issues until you do have these falls in the fall in price, um, which we're seeing now. And then of course, like that sort of like overall fear and a lot of people exiting the market. We had a lot more people that were, institutions, different players that were ready to get in, that would not have the risk appetite to stay in when things are getting on shaky ground too. to a much greater extent than we had in the past as well. So yeah, I don't think I could pinpoint like a single event, but I would say it was sort of there's many different factors at play that making this downturn. I mean, and then anyways, we do have these sort of, as you say, like these crypto winters every so often, but this one's been particularly challenging. And I think we had, just with a lot more companies and a lot more people entering the space, we had a lot of exuberance, a lot of hiring, a lot of people like looking like more and more players. So you want to fight out the competition. That means sort of maybe hiring too fast and on all of these other sorts of effects that happen around that, and around just like the increase in funding, in attention, in credibility that it's taken to build up over the last 12 years. I think now we do definitely have like the consensus that the space isn't going away. Yeah. And so then when it's going well, you just had a lot more interest in it overall. Where
So you seem to be saying it sort of washed away the that sort of exuberance, right? And in that sense, it was healthy. Would you agree with that? Because when you now have slimmer balance sheets, right, where people have to prepare for that winter to take a while for us to recover from, right? Now is the time to build. Is this the time to hunker down and build and really focus on the use cases, on solving problems?
I'm biased, so just from my own perspective, I would say it's always the time to build and to focus on real use cases. But I just think I think that's really where the real value is going to come out of. In terms of like whether it was positive or healthy, I mean, I think I think it's a lot of things that happen are incredibly unfortunate, and yeah, we can't turn back time. I guess it's good for some of those issues to come out sooner rather than later, and it seems like that has happened in some cases here. I think it's unfortunate that some people are scared off. It's definitely unfortunate, what happened to people who like lost their savings as like the result of promises or sales pitches and products that they actually would have thought they were going to sort of a safer option of entering the space. I think that's really unfortunate in terms of how people will feel about it, and just the time it will take to rebuild that kind of trust and comfort. But if things were set up that way and then it took that, then hopefully there will be lessons learned. How long will those lessons be remembered? Just as we could see sort of like in other examples, and why I'm sort of emphasizing the history element, like we'll have to see how long that lasts. But hopefully, and can we as a space, can people have like the humility to take these sorts of lessons and to look at how they can build in risk management, how to ensure that the designs are sort of more open source, that we are sort of testing things. There's lots more that has to be done there. I think one other sort of challenge here is that like we knew regulation was coming. We need regulatory clarity. It will be a net positive for the industry, I have no doubt. But just given these sorts of some of the things that happen, then it's going to be it's likely going to be a much tougher crackdown now. So that's not necessarily a good thing, because we're already fighting against a desire for over-regulation in a lot of instances because of the overall misconceptions about the industry, and just how regulators and policymakers tend to work, and the complexity behind that too. So yeah, there's positives and negatives.
Yeah.
but certainly still
with any
bullish.
sort of market
Yeah,
cycle.
yeah, yeah.
Yeah, you're still bullish. Good.
Optimistic,
Right.
yes.
Well, for me, is the time to buy, right? You got to be, you know, if especially as you were saying, right? Do your research. Do your research. You know, learn the history. Especially when you're investing into something new. Like any investor needs to do their due diligence, right? I was before the first time I went into Polygon, for example, I was researching, you know, read every single blog post of the Polygon community, you know, talked to a few developers that were building projects, and then invested, and then bought tokens, right? Because a lot of the time, this is the, you know, the tokens are you're investing in a form of equity in some of those projects, and you know, sometimes you investing or not, depending on, you know, how much money is involved, will determine the success or failure of those individual projects on, you know, on those networks, right? So I would definitely agree with you. Do your research, learn from history, also learn at the macro level from the historical, you know, cycles of the markets, and yeah, get better prepared for times like these, and learn from them for sure. Thank you so much, Diana, for being on the show. You are a legend already in my eyes. So I'm definitely going to be following your story very closely, and looking forward to see what the future holds for you. Thank you
Thank you,
so much.
Adam.
To the audience, stay tuned for more legendary tales as we bring you those most inspiring stories from the crypto legends of Web3. Crypto Legends is going to be back soon. Thank you.